these inflation reports are going to have a lot to do with the bond market, a lot to do with the stock market tomorrow in particular, because of just kind of all eyes on really the Fed, rate cuts, what they're going to do next. Anything that deters that is certainly going to put the kibosh on the recent bullish rally that we've had over the last few days. So let's flip over and talk about what you need to know before the bell real quick. The market kind of spent a lot of the day yesterday kind of flopping around. Finished up just barely positive yesterday, but put in another green candle in yesterday's activity. So again, this bullish rise, ever since we did this last check of the 100-day moving average, we crashed through the 20, crashed through the 50, have just kept on traveling higher here. Markets are back to overbought. We're still in that buy signal, so again, nothing to worry about. Expect a correction here in the next few days. Now again, not a 10% correction, I'm not talking about another April type event, but expect a little bit of a pullback here, retest that 50-day moving average. That would actually be a healthy process in the markets right now. But again, just something to alleviate some of this overbought condition in the next few days. Again, that could be the CPI report tomorrow comes in a little bit hotter than expected. That would certainly cause markets to kind of sell off here a bit. And there's a risk, by the way, in the data that because of the lag effect in the data, that CPI report may be a little bit hotter than expected. So again, while most of Wall Street is expecting a cooler print, there is not a zero chance of a hotter than expected print. So something in line at 0.4, maybe even a 0.5 print, that would certainly put pressure on the markets tomorrow. So again, there's certainly some risk there, so be aware of that. On the bond side as well, interest rates have been kind of coming down here. We kind of peaked recently, have been selling off. So again, we peaked in last October, November, sold off. Interest rates kind of rallied back from a deeply overbought condition. Now they've gotten, kind of working back down, sitting on kind of support here. Again, a weaker than expected CPI print tomorrow is going to kind of fuel a potential push for interest rates to go lower, bond prices to go higher. Remember, this is an inverted chart, so this is interest rates, again, on a sell signal here, which suggests lower rates, higher bond prices. But again, there's a good bit of resistance right here. So where you've got the 50-day sitting right below where interest rates are right now. So again, if we can get through those moving averages, then interest rates can certainly go lower from here. But again, maybe a little bit too soon for that. We'll see what happens again tomorrow. These inflation reports are going to have a lot to do with the bond market, a lot to do with the stock market tomorrow in particular, because of just kind of all eyes on really the Fed, rate cuts, what they're going to do next. Anything that deters that is certainly going to, kind of put the kibosh on the recent bullish rally that we've had over the last few days. But again, that doesn't mean a huge correction, but again, kind of working off some of this overbought condition would not be surprising at all. So again, that's what you need to know before the bell this morning.